Hi, everyone. On the program, the moderator was supposed to be Chenyang. He has a last-minute family emergency, couldn't make it here, so I was called in the last minute. But rest assured that he gave me very good instructions on how this panel should run and introduced me to all the speakers last night. So I think I'm pretty well prepared. So in any case, if the panel goes well, my moderation goes well, all the credits go to him. But if there's anything wrong, I bear all the responsibilities. So that being said, we have very distinguished panel of speakers today who will share their experiences from various angles in this interesting topic of cross-border and overseas investments. This is a very highly contentious, uncertain environment. So things this year is very different from things last year. So we will be hearing from our panel of speakers from VC stage, PE stage, and also global investment opportunities. And finally, we will have a lawyer who would caution us what to do, what not to do, and what to be careful about. So that being said, so we are going to have each speaker talk about 7 to 8 minutes, and we will leave room for audiences to pose questions, so be prepared to jump in. So let me first give a very brief introductions of each single one of them and how everybody's speech will tie up together under this title. So our first speaker is Luke Tang. He is the general manager of TechCode Accelerator, which is a world's leading entrepreneurship ecosystem by providing incubator, accelerator, funding, and consulting. So you can see that it's a very early stage VC venture enterprise. It is located in Silicon Valley. Where else you think a better place to be? And also thanks, Luke, for coming all the way from Silicon Valley to join this conference. Mr. Tang holds a PhD in EE from Stanford University, which gives him a vantage point of a good understanding of high tech and also a rich relationship within the Stanford Silicon Valley communities. So our second speaker is Robin Hu, who is no stranger to the annual TCFA conferences. He was here last year and the year before, and through his exciting, inspiring speeches, he generated himself a lot of fans and followers and investors. Robin graduated from Tsinghua University and had graduate school study and security experiences in Canada. He is the founder of Shanghai Broad Resources Investment Management Corp, 上海博润投资有限公司, focusing on PE investments, later stage than VC, both in primary and secondary markets. So our third speaker is Mr. Jacob Kuang, who is currently Deputy CEO of Haitou Global, focusing on product structuring, risk control and hedges, due diligence, and institutional sales. Prior to Haitou, Dr. Kuang had been working at Citigroup in the famous yield book division for 20 years. So he is truly a Wall Street veteran. He was also a math professor before joining the Wall Street. He will share with us many investment opportunities in the world: US, China, Southeast Asia, Africa, Australia, truly a very global enterprise. So our last but not the least speaker is our lawyer, Jeff Zhang, who is someone the other speakers would have to turn to and consult with before taking any actions. Mr. Zhang is currently partner of Orrick law firm specialized in cross-border M&A and PE investments. He has done and been involved in many famous deals between China and the US. So he will shed light on what is appropriate, what is forbidden, and the current CFIUS regulation with its new FIRMA legislation. So without further ado, let's welcome our first speaker, Luke Tang.
Thanks, Jean. My pleasure to be with you this morning. So I want to use this opportunity to bring you some of the observations from Silicon Valley and also try to discuss where the next big opportunities are in the technology space. To give you some context of what we do, TechCode is one of the largest incubator and accelerator networks globally. We are in many different countries and locations. And each year we incubated about 2,000 startups globally. So we do have a lot of data points. Many of them have already exits. We started as the first AI accelerator program in the US several years ago. And then we gradually moved to IoT, mobility, healthcare, and fintech and other areas. The exciting thing is many of these trends are intersecting each other, and therefore we get to see the multiplication of these different growth curves. So the VC investments in the past 10 years have seen a steady growth. And this year, 2018, and if you look at the bar here, it's only showing the first 3 quarters. We are already reaching a decade high. And on the other hand, on the right side, you are seeing that there are plenty of exit opportunities, activities in both MA and IPO. The unicorns, the number of new unicorns have reached a decade high and this year. But these unicorns are staying private much longer, and they're raising big mega rounds of financing and trying to stay longer privately. And one could argue that because many of this value creation is happening in the private stage, and this leaves less gain for the public investors. This is probably one of the reasons that there's a lot of capital pouring into the relatively small VC industry. And we see the average VC fund has reached all-time high. And there's some mega funds being raised this year, including, for example, SoftBank's $100 billion Vision Fund. They are considering raising another one. But the risk is going forward, the competition for late-stage deals might get more intense. And the situation in the early stage are looking much more healthy. And even though the total deal value is continually increasing, we see the number of early stage deals are reaching decade high as well, instead of dropping down for the later stage deals. And this is driven by multiple tech disruptive trends in AI, big data, cloud, and IoT. If we just look at exits, we can see that the enterprise application of ABC, AI, big data, and cloud are the low-hanging fruits, and there are already quite a number of exits. That's why in the cloud space, for example, Adobe and Salesforce are grabbing all these different companies in the AI marketing space, paying a very lofty price. But moving forward, there are transformative opportunities on the application layer and the infrastructure layer. And these two layers, the application and infrastructure, they are reinforcing each other, they're influencing each other. For example, on the application layer, we mentioned about enterprise applications. But moving forward, there are a lot of opportunities on the industry applications in automotive, in real estate, retail, logistics, healthcare, etc. On the other hand, if you look at the infrastructure, all this market demand will push further for better infrastructure, for data and chip networks, etc. To give you a couple of examples. The first example I want to share, there are obviously a lot of quite a few startups are working in this space, is how the infrastructure layer has creating new and better applications. An example here is computer-assisted engineering. And when we design a car or airplane, we start with design optimization using computers, and then we move to the expensive prototyping. Think about now that there is breakthrough in computing industry that driven by all these machine learning infrastructures. And their startups have showing that there can be 100 times or 1,000 times of improvement. What would happen, right, in the future? Maybe they will spend much less time doing prototyping, testing, and rework, and spending most of the time actually doing simulations. And therefore, that gives us a much faster time to market and lower cost. A second example happens at the infrastructure layer, when we have all these different applications. We know that the data is the new oil. The valuable data is in the hands of a few big internet companies. The consumers like us and the traditional enterprise really cannot have effective ways to monetize the data we produce. The key challenges, actually, there are a few of them. One is how do you define the owner of the data? And how do you identify, segregate, and protect the security of the data? There are startups working on these problems. If these are solved, and when we leap to the next stage, there could be potential for the data assetization, and there will emerge, with clear control and data usage, there will emerge big players in data asset management like Fidelity or BlackRock for the financial products. So that's a huge game changer. And these industry applications are also reflected by the activities in corporate of interest space, the CVC. In the past 10 years, we have seen very steady increase of CVC activities and driven by this innovation across the industry verticals. The important thing is these are not just CVC by the tech companies like Intel, but also the CVCs from many traditional companies. We can see from automotive, healthcare, retail space, and they're getting very anxious to be disrupted. So they rely not only on the strategic investment, but also the open innovation process in order to overcome this innovator's dilemma and to be able to not only do it internally, but also be able to work closely with the startups to innovate much faster. And that's also how TechCode comes in and with many of these, how we engage with these big companies. And we set up specialized accelerator program. For example, in the digital health, we work with Bayer, and for the automotive industry, we work with Porsche to run these innovation programs. And that, on the one hand, provides the industry insights to our startups. On the other hand, our startup can scale much faster with the right customers, and also generating better returns and exits for the investment. So with that, I will end it here, and thank you very much.
Thank you, Luke. Okay, our next speaker, Robin.
Thanks, Dr. Lu Jin, and thanks for TCFA to invite me again here. Actually, I was here 4 years in a row since 2015. So glad to see a lot of old friends here, and glad to see even more new faces here. So every year I try to bring a story to Wall Street. So why I'm doing that? So for 3 reasons. One, because I'm based in Shanghai, and I have been back to China for more than 10 years. So I have to learn every year to see what's happened in the front line of the stock market, the Wall Street. Second reason is I give me some pressure, so try to finish or close one overseas either investments or cross-border M&A. So that's, I have a plan 3-4 years ago, and try to give me some pressure. So every year I have to bring some new stories here. So last 3 years, maybe give us some briefing of what happened in my investment. 3 years ago, 2018, I was here telling a story of a transplant. So what's happened? The leading companies in Chinese transplant company, we took over, finished taking over of the leading transplant company in USA, based in Chicago, valued at $100 million USD by cash. So we finished the deal at September 1, 2016, right before Chinese closing the foreign currency transfer cross-border. So 2 years ago, 2016, we brought the story of we tried to invest some innovative drug developers in USA, overseas, because in 2018, CFDA and FDA have a revolutionary policy. So FDA and CFDA will recognize each other's status since 2018. So that will expedite the new drug development since 2016. So since then, we invest like some frontliners like Beyond Spring, which is listed on NASDAQ in March 2017. And also we invested some front runners of new drug developers, anti-cancer, like Kintor Pharmaceutical in Suzhou, based in Suzhou, which will most likely be listed on Hong Kong Stock Exchange next year. And also some front runners for anti-cancer companies in Canada, based in UBC, Virogen, most likely will be maybe listed 2 years later, either on NASDAQ or Hong Kong Stock Exchange. So that's the stories 3 years ago, 2 years ago. Last year, if some friends here, I'm talking about integration or consolidation of industry. So last year, because our target company did some small deals, which is not big enough to let me tell here. So today, I bring a new story, IC designer. Not because the trade war, but because of the trade war, Chinese investors and also Wall Street know more about what's the status of semiconductor industry, what's the status in China after the ZTE deal. So I will probably spend very limited time to tell the story why we are in the IC industry today. So finding value, what's the value here right now? Okay, US obviously leads the market, followed by Korea, Japan, Europe, Taiwan, China. China, number 6. China's semiconductor industry, huge gap of supply and demand. Well, obviously supply is not enough, but demand is huge. Chinese semiconductor industry, domestic substitution appears at the right time. So in the middle to lower market, domestic substitution will appear. But in the up, middle, and high-end market, so China is far away from US. So China's IC design enterprise is difficult surviving. Like 10 years ago, we have tons of distributors. So 10 years ago, we have invested in one of the leading distributors in China, PNS, which is listed on China Venture Board, 300184.Shenzhen. So after 10 years, China's distributors have been consolidated. So right now, the big distributors, the top 3, maybe occupy over 50% of the whole distribution market. So 10 years ago, thousands of distributors in China. Right now, that situation happened again in the designer. So right now, we have thousands of designers in China, but they have a very tough time to survive. So it's the right time to consolidate. So that's the right story. Well, that's the traditional IC design business model. Okay, so we have wafer, we have wafer insertion, we have capsation, we have programming, we have plan, we have logistics. So the whole long chain share the value. So everybody get little tiny profit. So they have a hard time to survive. Okay, so our target, our story, so it's a Hong Kong company. So with high cost performance wafer product supply platform. Okay, so because today time is very limited, so we don't have much time to explore the story, to explain. But if interesting colleagues or people can talk to me or my colleagues, we have colleagues in the audience. So. Okay, so that's the major partners. like PNS, that's the leading distributors we invested 10 years ago, and finished consolidating the Chinese distribution market. So right now it's on the top 3. And also we have the high grades. We have InMicro as partners. Okay, so the key resources is we consolidate the whole chain. Okay, so the investment opportunity for the consolidation. So that's the main story I bring. So this company, we will use Hong Kong Stock Exchange as the base, and we'll consolidate the over thousands of Chinese IC designers, focusing on the medium to low market, and also the products will be focusing on the consumer product, consumer electronic products. Okay, so I stop here.
Thank you, Robin. Okay, we will wait until the end for Q&A. So our next speaker is Jacob Kuang.
Thanks for inviting us to the panel. And I don't have a slide, but I just speak about what Haitou's view on overseas investment. At Haitou, we believe there's 5 major reasons for overseas investment. The first one is socioeconomic growth. This is a long-term strategic reason. For example, the US GDP is growing at 3%, but the Southeast Asia countries grows at 6%. So there's opportunity. And the population growth in most developed countries are negative. However, in most of the emerging market countries are positive. So the investment is highly correlated to economic growth and population growth. Currently, we are researching opportunities in Africa that has huge infrastructure investment demand. And in India, there's I think it's the next greatest population dividend country. And Vietnam and ASEAN, and that's associated of Southeast Asia country. That's, I believe it's the next world factory. So the second reason for overseas investment is diversification and allocation. This is also a strategic reason. There's a study that says the average correlation between US market return and various world market return is about 55% for the 20 years from 1990 to 2011. And among emerging market countries, the correlation is even lower at 15%. So everyone knows from modern portfolio theory, you know, the assets in the portfolio is uncorrelated, will produce enhanced risk-adjusted return. And about allocation, I think basically all investors, include central bank, are doing allocations. You know, central bank even allocate their foreign reserves. So currently, you know, because the Chinese yuan is in the SDR basket, I think that creates some opportunities for countries, for investors. So in other words, I think investing in Chinese assets is a valid reason and is a valid trend. The third reason for overseas investment is innovation. The U.S. has the most advanced financial ideas, you know, whether it's in structured finance or securitization or derivative embedded deals. But other countries has their own innovation ideas as well. So, for example, earlier the panel, they mentioned about payment technology. You know, China has the best payment on a mobile payment technology. And so those innovation ideas or innovation trend makes the overseas investment a must. You know, that there's too many success stories, you know, like South African investor investing in Alibaba. So right now, I think in Southeast Asia or emerging market countries, there's the inclusive finance and microfinance is a big trend. And that also creates a lot of opportunities in investment as well as in technology. The fourth reason is interest rate disparity. So, for example, the U.S. currently has the highest rate among G10 countries, and so internationally money tends to flow into the high yield currency. And the fifth reason for overseas investment is in various swap market, it create a lot of unique opportunities. So I would tell two historical famous example. One is in 2007, German investors invest in U.S. municipal bond. The U.S. municipal bond has tax advantage for U.S. person, but why German people want to invest? Because there was a huge dislocation between the taxable market, which is the liable market, and the tax-exempted market, which is the municipal market. So the German Deutsche Bank, you know, spot the opportunity. And the second example is in 2016, when Japanese bond yield is negative, but a lot of Australian investors invest in Japanese yuan. So that because the swap market provide a good hedge on investing in Japanese yuan. So that give the 5 reasons for overseas investment. Thanks.
Thank you, Jacob. So sounds like there are lots of opportunities from a VC and PE and global, all the markets and all the sectors. So our Jeff, our lawyer, is going to put a stoppage on all those things. So let's be watchful.
Okay. Thank you, Lu Jing. Thank you all. My last time at this TCFA panel was 10 years ago, 2008. Was a very different environment back then, and my panel actually discussed the subprime regulatory issues. This year, there's another hot regulatory topic, which is on cryptocurrency and blockchain. Will be the first or the second panel this afternoon. I want to encourage a lot of people here who had interest to attend that panel as well. The legal industry in the U.S. Very special. 2017, the total revenue from the U.S. legal industry is $300 billion. It's about 1.5% of U.S. GDP. Bigger than management consulting, bigger than accounting, for example. I think the reason the U.S. Legal industry has such a big number, I guess, for 2 reasons. Number one, I think the lawyers really helped facilitate a lot of transactions. The way I look at it, basically lawyers are helping their clients to get the upside. But also you see, more often on TV, you see regulatory lawyers, litigation lawyers. What they do, to simply put, they help their clients to cover the downside. So 1.5% of GDP, but make this country really functioning. So I would argue that, the legal fee is not that expensive. You pay 1.5%, you keep the country running, you keep the business people, in a good environment to make money. So I'm going to, spend a few minutes to talk about my firm, Orrick. It's actually a classic example to show what lawyers do to facilitate the transactions and also help the clients to cover the downside risks. At the end of the PPT, I'm going to talk about a hot topic, which is CFIUS and FIRMA. I'm going to go through quickly because, I have 20 PPT pages. So this is the first page. You can see that what lawyers do in terms of sector. We really focus on technology, energy and infrastructure, and finance. And, from a different perspective, we focus on transaction, but we also focus on regulatory, litigation, and IP. So they're just different ways to look at a law firm's portfolio. Those are the three areas we focus on, but I want to, highlight those two overlapping areas which we see a lot of movements from our client base. One is the overlapping gray area between finance and technology. Of course, you see a lot of movements in fintech area, cryptocurrency, and blockchain technology these days. Those are just some rankings of my firm. These are the global footprint. Basically, lawyers are following, all the industrial folks to, everywhere, basically. Asia, Africa, Latin America, and China, of course. This is one big sector, tech, all kinds of tech companies. In the old days, you see kind of more traditional tech companies like IBM or Microsoft, but these days you see some new names. Fintech and, auto vehicles are the two, I think, top two sectors. We see a lot of movements in the past year, both in China and the US, and you also see a lot of synergies between those two countries. Because on one hand, US has the top-notch B2B fintech technology. China has very good B2C fintech technologies. But you see a lot of Chinese entrepreneurs coming here to look at B2B targets. Auto vehicles, same. China has very good data. Baidu, Tencent, Navy Info, those leading companies that have very good data. But the U.S. has very good auto technology, auto driving, for example. So again, you see on the deal side, you see a lot of deal happening, or they try to happen in this area. This is a more traditional area, energy infrastructure. This one, Africa, we still see a lot of movements, both for U.S. company and China companies moving to Africa. Africa definitely, we see, a lot of people had, betted on Africa for a long time. But we see kind of more movements in the last 2 years, and in some of the jurisdictions, they actually tend, to present or prove to be a very good opportunity for investors. Finance, we have Golden Bridge on this page because my firm Orrick, we started in San Francisco 160 years ago. Qing Dynasty, another way to look at it. And we're the project finance lawyer for Golden Gate Bridge. Again, you look at the financial sector, you see a lot of Wall Street firm names, but I would argue that more and more you see some new names, kind of, diverging from the traditional Wall Street firm names. This is just another ranking. We're very focused on innovation. So CFIUS and FIRMA, big topic this year. Robin just mentioned in 2015, 2016, he did a very interesting transaction acquiring a firm in Chicago listed in London Stock Exchange, AIM listing, which is in biotech in the broad category of healthcare industry. But this year, for deals like that, it's under heightened scrutiny by CFIUS. Basically, what the Congress has done is they, passed a new legislation called FIRMA. But what FIRMA has done on two fronts. Number one, in the old days, prior to FIRMA, CFIUS filing in general is voluntary filings, which means you have the transaction parties have the discretion whether to file or not. But after FIRMA's been passed, basically certain deals, they have to make the filing. If you don't make the filing, not only the transaction will be rewind, but also the CFIUS committee could impose a fine which is up to the transaction value. For example, I'm just using Robin's deal again. His deal size was 90 million, right, Robin? Robin's too focused. So if CFIUS think this transaction has to be mandatorily filed and you didn't do the filing, CFIUS theoretically could impose a 90 million fine on this transaction. The second thing is CFIUS basically changed the definition of control. So in the old days, a lot of transactions could rely on a safe harbor. Basically, the parties could argue that after the acquisition, the new owner would not obtain the controlling influence on the target, then they can rely on a safe harbor. But now the controlling influence definition has been redefined, so more easily you could trigger that definition. So we see a lot of Chinese clients that try to structure around. 2016 or 2017, there's a Chinese fund called China Reform Fund. They set up entity in the U.S. acting as a GP, and they basically also hired 2 U.S. citizens to manage that GP. So they're trying to make an argument in front of CFIUS saying, look, we're using a U.S. person-controlled GP to manage our fund, and as such, the deal they did was not done by a foreign person. But the reality was, behind the GP, there's only one LP, which is China Reform Fund, which has linkage with the CSAC, the government agency controlling all those big SOEs. So that transaction, very unfortunately, was vetoed by President Trump himself. So after that, I think CFIUS is paying more attention to those structures. But still, you can see, if this is a lot of details there. People are still trying to structure around using the fund structure. We, as transaction lawyers, we basically, studied all kinds of models, and there are different ways to do this. But again, I would say, with a cautionary note, it's getting more and more difficult. So back to the big picture. Last year, definitely, actually this year, 2018, we see a sharp drop of U.S. bond investment by Chinese investors, either 92 or 94% decrease. So it's a big drop. But on the other hand, we see more investment flow from China to Europe. Overall, China outbound investment 2018 for, I think 2 basic reasons. Number one, the deal environment in the Western countries are not friendly to Chinese investors, particularly in the U.S. Also because China imposed more stringent foreign exchange control policies. But still, we see a lot of deals has been done, particularly the European bond deals. With that, I would turn back to the moderator and see whether we can answer any questions. Yeah.
Sorry, we are running out of time. Again, everybody is encouraged to talk to the speakers over here. So if you are an entrepreneur, so we have Luke here who provides accelerators, incubators, which is in short supply in New York, but overabundance in Silicon Valley area. And then if you are high net worth individuals, so you can talk to the other PE and global, Haitou Global. And finally, talk to the lawyer. They are necessary. Thank you so much.